So I'm not normally big on doing daily market update type of stuff, but what's going on today is pretty important. What we're seeing is basically every market is down. Stocks, bonds, metals, crypto, even oil and gas. This is a big story. It's much more than just today. So let's take a minute here and dive into what's really going on, because this could shape what goes on over the next months, maybe even years. I hope not, but I think this is going to be a trend that we're going to see. The new Fed chairman sees his job pretty much exclusively as fighting inflation, which honestly is good, right? We don't like inflation, but you know who does? The market. And the reason that they like it is because it's generally going to be correlated with cheaper and more available access to borrowing, to money, right? Another reason that particularly the metals market likes it is because metals are seen as a hedge against inflation. So if we're going to have lower inflation going forward, there's maybe no great reason to be hedging against it. And that's a big part of what we're seeing today in the metals market. But that's not everything. There's quite a bit more going on. So in trading, what you'll see is positions getting liquidated. This is automatically set stop losses and margin, right? So when prices begin to fall, they hit stop losses and they hit margin calls. So trades are automatically made. And in this scenario, they're made to the downside. So once you start hitting levels below where people have put their stop losses, they're going to get liquidated automatically, which is just going to cascade the price down even further. And it's not people sitting at their desk or calling their financial advisors. These are automatically set. I wouldn't say there's no way to stop them, but they're already set into motion. So they're going to happen automatically. And so that just begins to cascade its way down through the system. Let's take a look at oil, because it's down today again as well. We've seen a little bit of the tension globally winding down. Things aren't quite as scary as they were even just a few days ago. So that's going to drop the price of oil, because it leads us all to believe that oil is going to continue to flow quickly and freely, and there's not going to be a major shock to the system. And that shock was already sort of priced in. So now it's less likely that we're going to have supply issues. So that risk is being taken back out of the market. We're seeing that. Something else we're seeing is simple profit taking, right? The market's been up for, it seems like 20 years, right? I mean, it's near all-time highs. Even after today, it's not far off of all-time highs. So some investors are just saying, well, let me go ahead and get my money out of here. I've made a profit. Let me lock it in, see what the market does over the next few days, weeks, months, and then decide if I want to get back in. So when you couple profit taking with risk management, or just wanting to overall reduce the risk, you can see big sell-offs like this in every asset, not just stocks, not just bonds, not just metals, but everything. It'll all come down at once. Let's not forget crypto. It's having a terrible day. It's had a bad run. There's some different things going on there as well, but again, we're seeing a lot of people taking risk off the table, especially because the likelihood of inflation is down. The likelihood of free money printing is down. And so if you're not afraid of the money you've already got losing its purchasing power, there's really no great reason to put it at risk. There's also some terrible employment data that just came out. It looks like overall 108,000 layoffs took place in January. That's a lot. That's net negative on the employment picture. And there's also fewer job openings. So we've got layoffs, people losing their job, and then we've also got fewer companies willing to hire anybody. I've made a few videos and discussed the impact that AI is going to have on the jobs market, and I can guarantee you that this is a part of that, right? When you can have a machine, a computer, do most of the thinking for you, there's no reason to hire people to do a lot of these tasks that in the past did require people, right? So employers are looking at it as any reasonable reason that they can think of to lower their employment, lower the number of jobs, lower their payroll. They're going to go ahead and take it. And we're definitely seeing that go on right now. And again, I want to let you know that this isn't probably just a one-day event. This is a shift really in sentiment. This is a shift in the way people are viewing risk assets and viewing the markets. They're thinking to themselves, I can hang on to the cash I've got, I can hang on to the money I've got. It's less likely to lose significant amount of value because it looks like we're going to be in a lower inflationary environment. So why should I put my money at risk of it losing 10, 20, 30, 40, 50%? Who knows, right? Why should I put my money at risk if there's virtually no risk that it's going to lose a significant amount of its purchasing power if I just hang on to it? And so we're seeing all of these factors sort of come together at once. And I'd love to say it's just going to be a one-day sell-off. I'd love to say I was just having a bad day, but that may not be the case. There is a silver lining, though. Let me throw this in there, right? A big part of the reason it's doing this today, particularly in stocks and to some extent in metals, is people have made quite a bit of profit, right? They've already made a significant amount of money over the last years in stocks and over the last few months in metals. So why not just lock that in now? Let the market cool off, see what happens going forward, and then decide if you want to stick a toe back in the water, dive back in later on. But I think for a lot of people, and myself included, I've dialed back the aggressiveness, the aggression of my portfolio over the last few weeks, really. And with the way everything's shaping up right now, there's just no great reason to be putting your assets at risk in this environment, because it's really, really difficult to know what's going to happen going forward, right? And if you're pretty well convinced that your money's not going to lose much value just sitting on the sidelines, it makes a lot of sense, right? So the silver lining is your money is likely to hold its value better, and a lot of this is profit taking. So hopefully that includes you as well. Keep your eyes open on everything that's going on, because there's a lot of things going on. This isn't just a one-dimensional move. I'll probably talk more about the metals market just because it's most interesting to me, and I think I know most about it. And I'll update you on that as well, because there's a lot of stuff going on that isn't really making big headlines, and stuff that you might not even have considered that is moving the market now and is likely to continue to move the market. So make sure you hit subscribe. I like to try to keep everybody as updated as I can as far as what I think is going on. None of this is advice. Don't take advice from strangers on the internet, I like to say. But do your own research, and this can be a part of that research. This can give you some ideas of where you can look to make your own decisions, right, about what's likely to happen next. So subscribe, follow, share, all that kind of good stuff. And I'll be back soon to update you again.